Good afternoon, everyone. Time for another Precious Metals update. I'm JR. Today is November 10th. Today is Tuesday, November 10th, 12:26 p.m. Eastern Standard Time. So today I'll do monthly analysis, weekly and daily for gold, silver, platinum, palladium. Actually, platinum and palladium, I'm just going to do the longer time frame, so I'll just do monthly and weekly. And of course, then you have the Dow Jones. I'm going to do a Dow Jones ratio to gold. Long-term analysis is a monthly chart here for gold. You probably don't recognize this because this is back when price action was back in 1970. Was back in the $35. Okay, so remember that between the 40s and the 1970s, really what we had was a pseudo gold standard where it wasn't necessarily a gold standard, but it kind of was. So point is that back in 1970, so we had really a flat price. Gold was really roughly $35 up until into the 40s and or the late 30s, and between the 1915 and 1930, I think gold was trading in around $20 at an average. So again, here we had President Nixon let go of that gold standard, right? And the second he let go of that gold standard, now this is a monthly chart, so every move, every candle that you see is going to represent one month. So this is a very long-term analysis here. So again, trading in at 35, went up to around 37, and when they announced that they were going to let go of the gold standard, it really within a year, it had gone from 37 to 43. By 1973, it already had doubled, almost doubled to $67, $68. You really can't see these candles. Obviously, I just have the price points here, but there are no candles because this is, again, it goes back further than the chart really goes back. But again, these little dots still represents the prices of gold, right? Then you had in 1974, in 1 year, the price of gold goes from $66, and in 1974, it was at around $128, okay? By 1975, by the March of 1975, you saw the peak at around $185 an ounce. Okay, now from 1971, which was roughly right here at $35, all the way to 1975, okay, within a matter of 4 years, gold had increased roughly 397%. A tremendous move. Really, again, what we saw here was the breaking of that rubber band, right? So the dollar stays strong, or it stays stable because it's connected to a commodity like gold and silver and platinum and real assets, right? So when we changed the convertibility of gold, of the dollar, from gold to nothing else, to government bonds, then what you had was that big move or the big down move for the US dollar, because the only thing that was keeping it steady was really gold. It wasn't man at all. It wasn't government. So you had a giant move of over 397%. So from the highs back in 1975, then we saw by 1977, we had lost roughly around 44%. Big move to the downside, or some actually say that this move from 185 to 102, 103, this is the current move where we are right now, where we've lost roughly 45%, but we're still going to head up, right? So let's keep going, see what happens back in the middle of 1976, when we saw that 44% dip, right? So I'm pretty sure at this point, anyone buying gold or selling gold is probably thinking that there's no way in the world this thing is going to go over a high of 184. We've already multiplied. We've already gone from $35 to $185. Again, a move of over 400%, almost 400% in less than 3 or 4 years. What happens within the next 2 to 3 years that follow? So you have 1976, middle of 1976, the market continues, and you had another big move. You broke through the upside right here. So you had a big move to the upside. You had a break. You had a little bit of a move to the downside, right? So you go from 184. You break the highs at 189. You break this high at 184. You hit 189. The market pulls back down. It goes to this level of support here, roughly right here. Find support in this trend line coming up. and you had a huge break, another break of this high, and now you're at 240%. I'm sorry, $240 by 1979. By 1980, okay, you went from within a matter of 10 years, gold goes from $32, $35, all the way to $848. That's a move of 2,500% in a matter of 10 years. So gold got ahead of itself, obviously. And obviously what we saw was a big move to the downside, right? So gold goes from 850 back down, and it finds some support roughly at around this level. So you have this trend line coming up here. Remember, this trend line was the one that shot us up, right? So the move goes up, and it finds some more support at that exact same trend line here, right? So now you have some sideways consolidation. Now you have a really nice area where you find some buyers and you have a big move to the upside, right? There's that area again. The market is reacting to that area because, again, this is where we saw a lot of buyers come in, maybe trying to take advantage of this sale, right? And what happens? The market goes up a little bit. It does not create a higher high, okay? Let's point that out. We do not create a higher high. And find some resistance. This line, it used to be support, now turn resistance. Now pushes the market down, and let's see where it goes, right? So again, we have established that there are some buyers in this area, okay? And by the way, this line, I just got this line from the lows of $35, matching it up with the lows of 1979. So let's see what happens, right? So you have the market is still reacting. Again, this is a good level to buy for buyers, right? So the market is still trading sideways. And finally, in 1997, okay, you have a really nice engulfing candle here, okay? Let's see if we can zoom into that candle. Okay, there's your engulfing candle. This is your signal to buy, okay? Now, when you buy in that candle, because again, the reason why we know there are some buyers in any given area is because of the candle. So this is the buy zone. This is a big candle confirming that there are buyers. So again, you want to buy at the middle of the candle, or you want to buy at the bottom of the candle. So let's see what happens in 1997. So if you would have bought here, maybe your stop loss would have been roughly around this area here, because you always want to put the stop loss a little bit lower, right? So if you put a stop loss, if you gave yourself enough breathing room, then maybe you didn't get stopped out, but the market does seem to be heading down. You have another big another nice candle here. Let's see what happens. All right, there you go. You get stopped out completely. Now you think that the market is that the bear trend is in complete control, but again, you got stopped out. What are you going to do? You lose 1 or 2% or whatever it was that your bet was, but your goal was to come back up here. So that was a great risk to reward. If you lost, that's how the game works. You just have to find those good risk to reward levels, right? Then you have the giant candle here that confirms that there are indeed some buyers in this area here. Okay, this is your big candle. Now this level becomes the level where you want to try to start accumulating. Again, your stop loss wants to be at around 248, 246. Now keep in mind, okay, that you are still in a downtrend. Okay, this candle just shows that there's a lot of buyers because it took out some of these levels of resistance, right? So what happens? This is your area to buy, hits this level, you do not get stopped out. Let's see if you're making money, and the market begins to go up, and now you are in serious serious green, right? So this was back in 2002. This is where the bull market began. Obviously, we know based on price action that the market never came back below 250, right? So now what happens, right? You might find some resistance here. Let's see if this level was going to act as resistance. It actually did for quite some time right here. All right. And now what do we have here? We have what seems to be a cup and handle here. Okay. Here's your cup and handle. All right. We all know that these cup and handles, if you've been watching my videos, I love these cup and handle formations. because they suggest that prices are going to go up much, much higher. They're very, very, very bullish. If they come into play, they're very bullish. So you have your cup. This is your handle right here. This is the dip. Now what you want to see is you want to see a break above this level here. You want to see a break, a move up, come back and test that that handle formation. You want to retest the handle formation. At that point, you're buying around this area here, and this is what the market does. And again, within a matter of 10 years, what do we have? We see gold go from let's see here. So within a matter of 10 years, gold goes from 252, again, an increase of 188%. Okay, let's see what happens now as the market continues to end. It continues to go up, right? So now we have a break of this. Again, that cup and handle worked out phenomenal, and now this market goes up to 1,000. So now you have an increase within the last 10 years. You have an increase of 300% within within the year 1999, November of 1999, where the bull market began, all the way to October the 8th. I'm sorry, 2008, March of 2008, where we see the crash of 2008. So gold goes from 1029, which was the high, all the way down to test this level of support, right? So now within this, remember, this was your cup and handle formation here. Now with if we look at the market a bit further, now what we have here is we have another cup and handle formation. Here's the other cup and handle formation. There it is. Market goes above that level, right? Go up to 1,000, you come back down, and you retest the handle of this giant cup and handle formation, right? So now what happens? The market goes up. It goes up even higher. It goes up to 1,900 within that cup and handle formation. So again, within a matter of 10, let's say 11 years, now this market has increased. Let's see how much. From 247 all the way up to 1,900, you have an increase of 673%. Guys, gold is unlike any other currency in history. It is stable. Now, if you look at this chart, you can possibly say, well, this is not stable. Yeah, it's very stable. It's actually going up in a very stable manner, right? So now you have another correction. Now the correction begins again, right? And this is where we are right now, right? So now what it looks like is the market again is making a big move to the upside. Okay. Now you have that big move to the upside, and now we look for where gold can potentially go, right? So now let's zoom in here within the last 10 years. Okay. This is a level of support, coincides with this. This is your support trend line here. A break of this level will definitely come back down, or will most likely bring this market to reach this level here, which again, it's a phenomenal level of support. Okay. So based on these charts, I think it's fairly obvious that the market is going up, and it's going to continue to go up. I mean, we're printing money. Interest rates are at zero. The ECB announced just a day or two ago that it's interested in possibly bringing down rates even lower than what they are, and they're already in negative territory. So it'll be interesting to see how this game plays out, because really this is a monetary stimulus economy, and the economies around the world are not going to continue to improve if we don't continue to print money. A fiat system a fiat system only functions because of debt. So when you have a dollar and we're in a gold standard, somebody owes you, or the banks or the U.S. government owes you gold. When you have a dollar and that dollar is a fiat dollar, then what happens is you have basically something that doesn't belong to you. Those dollars belong to the Federal Reserve, because for every dollar that the Federal Reserve prints, the U.S. government owes that Federal Reserve that dollar back. So everything that we have in circulation is debt. If the banks could never be paid off, because if they do get paid off, then there wouldn't be any money in circulation. By definition, that's what a fiat system is money printed with debt. So the second the Federal Reserve prints a dollar, the government has to issue a bond that represents that dollar. So the way the U.S. government is guaranteeing the Federal Reserve that is going to pay that dollar back is by giving it that certificate. So the U.S. government gives the promise to the Federal Reserve that it's going to pay that dollar back, and in return, the Federal Reserve prints out a dollar bill. So all money in circulation is debt that the government owes the Federal Reserve. That money could never be paid off. The trick is to keep it going, but knowingly that it's never going to be paid off, because if it ever is paid off, then you and I will never have any dollar bills, because there wouldn't be any dollar bills in circulation. By its definition, it is debt. Okay? So let's get to the monthly analysis here, a little bit closer time frames here, a little bit more towards our where we are. But I really just wanted to show that because it kind of puts in perspective how these markets work, right? So you have a move from 35 to 185. You don't think that the market is going to go higher, and look what happens. The market just continues to go up. Then when you thought the market was not going to continue to go up higher, here it is again, and we have another big move to the upside, and here it is again. Now looks like a solid level of support. Let's see if we find some support here. But again, this trend line, it is a confluence with this with this level of support. So at this point, we want to see if this trend line is going to hold. Based on what the Federal Reserve is saying, I think they're going to raise interest rates next month. But then again, who knows? These guys have been saying they're going to raise interest rates for the last 7 years, 9 years, almost 8-9 years. So who's to say that they're going to do it? And even if they do, we're still not out of trouble at all. Because the trick is not to raise interest rates a quarter. The trick is to bring normalize interest rates back to 7, 8, 9, 10% and have the economy continue to function, right? So this is where we currently are. So we have a nice engulfing candle here, right? So let's see how this engulfing candle works out. But it is a piercing pattern, not necessarily an engulfing candle, but it is a piercing where this candle goes a little bit higher than the previous candle. When you find it at the bottom of a downtrend, that's usually very bullish. Okay, now let's take a look at the longer term frame here. The longer term channel, right? So this, as of now, before I had it drawn here, but obviously with this new candle here, now we can draw it here. Now, anytime we see this channel coming like this, right, what you want to assume is that you want to assume that the bottom of that channel is always going to be tested. So even though this is a great buy here at 1094, you have to be very careful, because this technically can go down to around the 1054 area. But again, really solid level of support here. At these levels, you can't really sell gold. You really just want to continue to accumulate a little bit here. If this market goes to 1050, you might be able to accumulate a little bit more. But really, like I said, this is the last level of support here. If the market falls below 950, if it really falls below 950, 920, then, you know, Houston, we have a problem. And this market can potentially come back down all the way down here, let's say to the 700 area. Again, based on economic fundamentals, I just don't buy that, right? So let's see. So currently testing this long-term trend. And at this point, let's see if we're going to find some support here on this level here. But again, there does seem to be some buyers. Again, these bigger candles, these green candles do suggest some buying. This is this month's candle. It's only about 10 days old, so you don't want to count this just yet. This can close up here for all we know. So again, we're going by last month's closing, right? So again, I am expecting a big move to the upside. We're going to see if we're going to hold here at this level or at this other level here. That's your monthly chart. Let's go to the weekly chart here for gold. Weekly chart here is same for gold. Again, finding some support here. solid level of support, and this level, this green area here, and of course you have the bottom of this channel here, which would be the most ideal area to buy. Okay, let's look at the daily. All right, now on the daily, you might have a quick bounce back up to this area here, maybe around the 1010, maybe even higher, who knows. But in these smaller term time frames, let's say this daily chart, you definitely have some really nice support roughly around this area here. Okay, how do I know this? Because this is the area where, again, number one, gold hasn't not closed below on a daily basis. It has not closed below 1086. It managed to close below 1086 back in August of 2015. It had only did this for 2 days, and it just took off from there. So based on that, I'm going to assume that there are some buyers here. It will probably do a little bit of a bounce here. Okay, go up from here, maybe back here, and then continue to go down, or who knows, it'll continue to go up. But at this point, really solid area of support, and all you want to do here is just be careful and try to buy with the bottom of this channel, or you can buy short term, take some profits quickly before it turns around on you. But as of now, phenomenal area to buy here short term, taking it up to, again, the 1010 area, 1020, 1030, and you only have about a $10-15 risk. Okay, let's go to silver. All right, guys, I just had some technical difficulties, but we are back. So here is the monthly chart for silver. I'm just going to breeze through the rest because I think I spent a little too much time here on this gold. Here's the monthly chart here for silver. Silver obviously finding some support here in this level of support. What we have is we have this trend line here coming from 2003. This trend line seems to be giving us some support. We have a really nice, let me delete some of these. So here it is, right? So we have this long-term trend line. Now this trend line has been breached a lot of times. Let's say, for example, here, we broke this trend line here, but we failed to hold. So again, once you saw that break of that trend, this was a really good buying area, but of course, the market continued to go down, right? So here's the next level. Then you have this next level here, and now for the last almost a year, the market really has been trading sideways. I would say between $17 all the way down to $14, right? But what you have is you have silver trading within this channel here, right? Let's take this out of the way here real quick so you can see it a bit more clear, right? So there's your channel, right? Now the market broke here, and then what happened was now we can draw this line, we can draw it against here. Okay, so slight break of this trend, and now we are above this trend line here, which is not a bad thing. What happens now? Same thing here. Now we can draw this trend line here within the most recent highs, right? Which is right here. Market had a nice engulfing candle here, very nice bullish engulfing candles. You've heard what I've said before about these engulfing candles. When you can buy them at the bottom of the candles, that's the best time to buy. And of course, you want to stop loss roughly around this area, maybe 1350, 1375. Okay, that's where you want to have your stop loss if you want to take a short-term trade over here and see if you can bring it back up to around the $17 range. Again, all these trades are based on risk versus reward. So you're risking about 55 cents to possibly make a $2 move. It's just a phenomenal trade. You have to take it, right? That's your monthly. But again, I will say that a move below this here, a move below 1390, a move below 1380 is going to open the doors to this area here, which is a 1280 all the way to 1270, all the way to 1290. Okay, that's your next level of support here, and then your final level of support, which would be really the best level of support, if you ask me. I'm not saying that I'd expect this market to go down this far, but geez, right? So this would be the next level of support here, roughly around this area. Why do I say that? Because really, since 2006, silver has only closed one time below this, actually two times below this $10, right? So since 2006, silver hasn't seen a close. So from here, we would expect the trend to reverse and finally start going up if we don't see. But as of now, we still have support here on this long-term trend line here. That's where we're looking to find some support. Again, that's a confluence with this level of level of support. You also have this level of support, so a lot of levels of support here. But again, if I'm trading what I see here, this is a great time to buy here. $14. You want to do, you already have some long-term positions, then buy short-term. Buy right here around 14.40, 14.30. Ideally, you want to get the best price at around $14 flat. You got a stop loss around 50 cents, 45 cents. You got a stop loss at around 13.60, and you're trying to bring this up to this level here around $17 plus. And again, if we do see this reversal, because we've broken through this trend line here, once we break through that trend line, you can assume that the market has turned around. So once you go above 1830, you would assume that now we have a flat. You found, so this is what you have, the low, right? And what you want to see is a break of that level, right? So if we break through it, then you can continue to go higher. Obviously that didn't happen, right? So then you had another shot at taking it out over here, right? What you wanted to do is break that level, come back, and then continue to go higher. That didn't happen either. Okay, and now the same thing here, right? So what you want to definitely look for is that reversal, right? Because when the reversal comes, it's going to be big. So this is your, now mind you, also these sideways trading areas are beginning to get much slower. So it could be that we just fall to this level here and then break out if we fall below this level here. But again, the Federal Reserve haven't announced that they're raising interest rates. So I think this is just the market taking some precaution here before the Fed meeting. But I do not, until they announce lower interest rates, I mean that they're going to raise interest rates, I don't expect silver to go down that much. I would expect to find some resistance and be back up to 1570 here before the announcement. And again, obviously after the announcement, if they do say that they're going to have a rate hike, you'll probably see silver create another low. If you do create another low, again, remember this is the next area of support. So I would hedge anything below 1360. Okay, if they don't raise interest rates, then I would assume that silver is going to continue to go higher and the bull market will begin. Okay, so again, nice engulfing candle here. Again, we always buy at the bottom of these candles, and that's exactly where we are. That's your monthly chart here for silver. For the weekly, again, really nice area of support. We still haven't seen a close below this area here. If this week closes below 1450, then it'll really be the first time that silver has closed below this level here since 2009. Okay, so we are really at a multi-year low. And again, you definitely do want to buy at these lows. If you get stopped out, you get stopped out. But again, you still own the metal. So, you know, by this point, if you haven't been accumulating, this is where you have to start accumulating, right? But again, good short term. We did really well with this trade here. Managed to take this trade over here. We got a little bit of a fake out here. We thought the market was going to continue to go up, but no big deal. Now the market is really back in buying range, if you ask me. Again, this is your trend line around 1420. So let's see how the market reacts in the next couple of days. That's your weekly and of course your daily. Again, it does look like there are some buyers here. These buyers managed to take out all these levels of resistance. So it does seem like there are some buyers here. And now, I mean, we have really 29, almost 2.5 weeks of down for the metals. So you should find some solid support here. Come back to the 15.5, maybe the high 15s before finding some solid direction. But really, this is the main level here to look out for, this key trend line here. We want to break that level. We want to continue to go higher. That's your gold. That's your silver. Let's look at Dow Jones. Dow Jones still trading within this channel here. I mentioned on my last video, this is a good area here to sell. Good risk to reward. If the market falls, great. If the market keeps going, you probably already have stocks. So this would just be a hedge play against some of the stocks if you are still highly vested in the stock market, right? The Dow versus gold, all right? On my previous video, I said that this is the level where you want to buy gold, sell the Dow. Obviously, if this goes above $17 or $18, you want to get out of the trade because it might continue to go a bit higher. Maybe go to this area here, maybe to 20 to 21. At that point, we'll see how these candles progress. But again, these are the key candles when you are at levels of support or levels of resistance, right? So these these candles here are the ones that decide that let the market know what this market is doing. So again, a big engulfing candle here. This candle did not work out, but it didn't go up much higher. It actually went up and then it broke that fall, and it actually created a lower low. So again, it does seem to be something going on in this area. So we'll keep a close eye on that. Let's look at copper. Copper also at a good buying range here. For copper, you're at the bottom of a trend here at multi-year lows. This copper chart doesn't go back below 2012, but we'll deal with what we have. That's your monthly chart. So the weekly chart here, you got a nice move to the upside followed by another move to the downside. Again, we are automatically assume that there are some buyers here. On copper, this is a really nice formation. It almost looks like a diamond formation. So if it is indeed a diamond formation, you're going to see a nice move to the upside, and you're going to target around this area here, or at least target this uptrend line. So again, great risk to reward. But again, remember, on these declining trends, you got to be very careful, because again, this market could continue to go down to test the bottom of this of channel. Okay, so caution. I would definitely advise to use caution on those areas here. Okay, and then of course platinum. You have platinum with again another really nice engulfing candle here for platinum. Okay, this is your engulfing candle. This is actually a piercing candle here. Goes up higher than the previous candle, than the middle of the previous candle. Where do you buy? You buy at the bottom. You got a stop loss at around 865, or let's say 870. And the target, again, talk about risk to reward. You're targeting this area here. So again, you're risking what, $20, $30 here to possibly make what, 100, almost $200. So talk about risk versus reward. That's the only way to trade. Okay, really on all these trades, you just have to be right once, and it'll outdo every wrong that you have. Because again, for example, on this trade here, you're risking, let's say you put your stop loss at around 217, you're risking roughly 3 to 4 points to possibly make 30 points. So again, those are the best risk to rewards. Let's see how it plays out though. Okay, and for now, that's about it. At this point, really, we are at really important levels here for the whole market in general. The Dow Jones came to 15.2. Now it went up to 17.7. If the market does indeed expect a rate hike, then I would assume that the market will start heading down from here. I wouldn't say drastically, but I would say that the air is going to start coming off the bubble, and I wouldn't expect, even if we do create another high above 18.3, which I don't expect to see, I just don't see this market with higher interest rates continuing to 19 and 20 and 21 and 22. So really, what you want to start looking for is the reversal signs, right? These big engulfing candles to the downside, so you can have a good break to the bottom. Okay, so for now, have a great rest of the week, and I'll see you guys next time. Bye bye.